Hello, listeners, and welcome back to another episode of Cognitive Dissidence. As usual, I'm your host. I'm Jacob Shapiro. I'm also a partner and the director of geopolitical analysis at Cognitive Investments. Thank you for all the well wishes. I'm doing better after my COVID bout. My wife is doing better. My baby Annie, who also got COVID, is doing better. We're all doing okay here, but it was no joke. So mask up, stay safe out there. Not something I would recommend if you can avoid getting it. Rob and I are back at it for a weekly chat. We were stymied by COVID last week and then travel the week before that. So we had a lot to catch up on, and I actually really love this episode. It's a little bit longer than most, but we had a lot to talk about because a lot's going on in the world from a geopolitics and investment perspective. So without much more ado from me, as always, write to me at jacob@cognitive.investments if you want to learn more about cognitive investments, or if you have questions or suggestions about the podcast itself. If you have a minute, please consider leaving a rating for this podcast wherever you are listening to this podcast. A lot of you have done that. I'd love to get to 100 by the end of the year. For some frame of reference, we're around 65 right now. So it takes 2 seconds of your time. It's immensely helpful for us, helps the algorithm, help other folks discover this podcast. Also, share it with your friends if you like it. That's also a great way to support us too. So enough glad handing for me. Let's get to Rob. Cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. Rob, it's been, 3 weeks since we got to do this normally. I missed you, man. How's it going?
Well, it feels like quite a long time, but good to be back in a new routine here.
Yeah, I mean, we've seen each other since then. We just haven't had a chance to sit down and actually do the podcast. And it's always a little bit intimidating because, I had COVID, I was traveling, you were moving, across the Atlantic, and the world goes on without you. Like you think it's gonna, like everything's gonna fall off a cliff, and then you're away for 3 weeks, and it's basically the same as where it was when you got there. So that's where we are. We're gonna hit 4 kind of key things in the podcast today. So we're gonna start with what started the week was this Russia grain deal. We're going to do some U.S.-China analysis and then talk about Brazil and Turkey because big developments there both. And then we'll talk a little shop and see where our nerdiness gets us. So I guess I'll just lead off the way and start with the week started off a little bit scary because apparently over last weekend, it looks like, I don't know if it was, I don't think Ukraine has claimed credit for it. The Russians are certainly accusing Ukraine of having attacked their naval base in Sevastopol in Crimea, which, if true, that's a big deal. That's Ukraine showing you, hey, we're not just going to, stalemate the Russians in eastern Ukraine. We're going to go after what they took in 2014. We're going to take a naval base in the Black Sea. I mean, that's a muscle flex if ever there was one. And Russia responded by pulling out of this grain deal that was negotiated by Turkey and that has succeeded in opening up Ukrainian grain exports to the world. You saw wheat prices spike again, corn prices, everybody was afraid. And then something really interesting happened. The Ukrainians kept exporting. They didn't really care. And Erdogan apparently called Putin on the phone and was browbeating him into, hey, this is not cool. You don't want to do this. All these developing market economies that are happy to see the grain deal go and happy to see grain exports flowing. I think maybe behind the scenes, they were putting some pressure on Russia too. So by Tuesday or Wednesday, actually by Wednesday morning, because I had to change some text in an analysis that I did, Russia did an about face. They said, just kidding. We're actually back in the grain deal. We're not going to do anything. And the reason I bring this up, it's 2 reasons. First of all, quite a shift just in a couple days. We went from, oh God, are we going back to the agricultural commodity price spike that we had in February and March? That didn't end up happening. But then another thing is, I think this war has gotten normalized, especially in the West. And I don't think we should normalize this slow motion collapse of at least Russian geopolitical influence and maybe the Russian government in the long term. You and I were just chatting beforehand. I'm thinking very, very strongly about what that means and who's going to benefit from that. So while most everybody else is focused on the European energy crisis, the things that we're continuing to see out of the Russia-Ukraine war and Russian weakness, my eye is on places like Poland. My eye is on places like Central and Eastern Europe, where people are generally bearish for a lot of good reasons in the short term. But, if Russia loses this conflict, if we live in a world where Ukraine can spank Russia in Crimea, we live in a world where Eastern Europe and the Balkans is a very, very interesting opportunity and is priced very, very low right now. So I don't know. Maybe we start there. How are you seeing it from your end?
Well, I'd love for you to walk us through that. So, if Russian power and influence really wanes and they're consumed with internal problems, how do you see that from the European Union standpoint in terms of Poland, Ukraine itself, the Baltics? How do they change in terms of their relationship with the EU?
So I think there's a couple, and I don't think all of Europe is created equal there. So we kind of have to divide it into different buckets. So if you're the Baltics, or if you're Poland, if Russia is so weak that it doesn't pose a meaningful threat to you, suddenly you have a level of security that you haven't really had at any time in the last century or two, at least. I mean, you really have to go back hundreds of years to where these countries felt secure and were actually the ones that were pushing against Russia. I mean, the Polish-Lithuanian Commonwealth was the largest country in Europe, I think in the 17th century. I think I have that right. I haven't looked very closely I'm a little rusty on my 17th century Polish-Lithuanian history. But that's generally a time where those countries do well, and if they're not so much worried about security, they can think about building the economy or have more optimism for the future. Maybe their demographics get a boost because there's more migration there from Russia, or maybe people are willing to have more children because they're more optimistic about the future. So that's what it means for those. For Germany, I get that it's bad for Germany in the short term because Germany bet on cheaper access to Russian natural gas. Like, that was the thing they wanted to do. But go back to Germany's grand strategy since it reunified under Otto von Bismarck in the late 1800s. It has all been about expansion east. They want to take over, and there are a lot of different ideological ways to describe it. Lebensraum for the Nazis. It's the European Union and trade and all that other stuff now. But it's all about expanding east. The Germans want to sell their products into the Russian market. They want those Russian workers to be the next generation of cheap labor for German goods so that they can build those factories out there and then export abroad. I feel like every single major German leader going back to Bismarck has been trying to do that. So if Russia's just going to collapse on itself, like, once Germany figures out the energy situation, and it'll take them some time to do that. I don't mean to what's the opposite of exaggerate? I don't mean to downplay the level of change that has to happen in the next 2 years and the amount of capital that Germany is going to have to spend to get through this. But if Russia's weak at the end of that, well, they're talking about integrating Ukraine into the EU already. They don't have to worry about Russia calling foul because apparently Russia can't do anything. That's some of the most productive, awesome part of the Russian sphere of influence anyway. And then maybe you can start moving further into Russia if you want, and from a position of strength. So in some ways, like, Germany is backing into the thing that it always wanted without having to send a Panzer tank anywhere. Ironically, it's France and some of these other Western European countries that never had to be that concerned about Moscow. They really just wanted the cheap commodities. So they were always interested in better relations with Russia and telling the Poles and the Baltic countries, hey, don't worry so much. It's fine. For them, I think they have the luxury of being agnostic here because, yes, they get higher energy prices, but it really doesn't matter to them so much in the end. So to make a long story short, if Russia's weaker, Eastern Europe should feel more secure and can focus more on the future. It should be a boon to Germany. And Western Europe, it's not that big of a deal. But maybe if you take that schism between West and East, where they don't have to fight over whether Russia's a threat anymore, maybe you take away one impediment to further European unity, so they can go squabble about something else rather than about who has kind of Moscow right. So that's the model, or the analytical thesis I'm toying with right now.
The other thing I'm thinking about that you didn't mention is, what is the potential impact of a Ukrainian rebuild after, the bulk of the fighting is over? I mean, people are talking about a Marshall Plan of sorts for Ukraine. The amount of steel being bandied about, numbers as far as what they would need, is kind of off the charts. like you need supply chains to bring that stuff into the country. It's very remote. I have to imagine that Poland, Hungary are going to be well positioned to benefit from that rebuild, right?
Tremendously. I mean, there's, and this is one of the reasons I'm so hot to trot about Poland, but it's great on a number of different levels, because if Russia's weak and Ukraine gets to export its agricultural commodities abroad, prices for agricultural commodities are up, and we think they're going to remain elevated. So Ukraine will have some capital here to throw into the system. It's not just going to be them. You already have Polish companies lining up saying, we are ready to rebuild Ukraine just about any time you want. If you were the European Union, might be I don't think this is going to happen. I'm exaggerating for effect here, but what if they decided to issue some euro debt to go ahead and rebuild Ukraine, and have some of these companies in Germany or Central Europe that are struggling so much right now? Well, what if you give them some fiscal incentive to go into Ukraine and actually help rebuild there? And then the other part of this is demographics, and this is another reason why Poland interests me so much, because there are a lot of close ties there, linguistically, culturally, historically. Excuse me. I think something like I think it's close to 4 million Ukrainian refugees are in Poland right now. So a lot of Eastern Europe, you've had really, really low fertility rates, even relative to all of the European continent. If suddenly you're also getting a lot of Ukrainians who have gone to those countries and are going to stay maybe in those countries and help rebuild back home, that's all good too. The last thing I would say, and this is, I don't think this has been talked about very much. Ukraine was not, like in 2014, even before the war, there are pro-Russian factions in Ukraine, and Ukraine has oligarchs of its own. And we're all very, I count myself among those who admire what the Ukrainians are doing in defending their homeland. It was a very, very corrupt state. It wasn't exactly a place where you knew where capital was going to be allocated or where you could trust rule of law and things like that. This war has probably obliterated at least some of that, because the pro-Russia factions have been completely delegitimized, and Zelensky now has the status of a hero. So he goes from, having to beg for scraps from the IMF and beg for defense here, and he's got these oligarchs that he's having to work with at home. He really might have a moment here, if he can get the war over on terms that are favorable to Ukraine, to reshape the Ukrainian state in a way that would have not been possible unless you had this kind of cataclysmic conflict. So for all of those reasons, I think you're on the money. There's a tremendous amount of opportunity waiting there. And it's still a big if, like Russia's still there, there's still troops on the ground, they're still conscripting folks and throwing them into the meat grinder. They apparently are importing missiles from the Iranians. They're that desperate, but they're still fighting. And the Russian population doesn't seem ready to revolt against Putin. So it's not a foregone conclusion. We also have to think about, is the West going to continue to export weapons to Ukraine? We've been exporting sort of leftover weapons we didn't use during the Cold War so far. Well, what if we actually have to start producing new weapons for them because they've already used a bunch in the conflict so far? Are we really willing to foot the bill? So none of it is a sure thing. But if we get that sort of Ukraine victory narrative starts to come out, and Russia really does have to tuck tail and reach some kind of agreement, or worst case scenario falls apart, those are the pieces that make me feel good.
And we had shared internally this Tim Snyder analysis, which was very good, about
really good,
the competing factions within Russia, and how certain figures like Kadyrov and I forget the name of the other gentleman who runs the...
I forget it too, but he's a Wagner Group guy.
Yeah, the Wagner Group
Great guy.
Yeah. Lovely people, all of them. How they were seemingly positioning to focus more on the home front and kind of throwing the conscripts into the heat in order to take away their own troops. How much credence do you give to that? What do you think about that analysis? Is that kind of the base case as far as the way to think about what's likely to play out, or is that not convincing for some reason?
Well, first, before I answer that question, I'll just say I was looking at the podcast data yesterday, and we had, I believe, 24 downloads in Russia from our last podcast. So Russian listeners, if you're out there and you feel confident enough, shoot me an email at jacob@cognitive.investments if you want to tell me if my finger is on the pulse here in your country correctly, because I don't feel like I'm losing my access to information in Russia and understanding kind of what the psyche is on the ground there. And I'd be curious if you're listening to this and they're like, oh, these are just some Western assholes who are insulting our great Russian leaders and entrepreneurs who create these mercenary groups. But anyway, I thought the Snyder piece was excellent. The Snyder piece was actually the thing that caused me to stand up straight in my chair and say, oh, like Ukraine might actually be able to win this war. I need to shift away from watching, the back and forth on the battlefield and take a real step back here and think about kind of the long-term trajectory for Russia. So Snyder picked a very difficult task for himself. He's trying to imagine scenarios for what happens to Russia in the next 2 to 5 years. And I think he does a good job of articulating a very realistic scenario of what a Russian state collapse could look like. That's obviously a spectrum of possibility that has to be built out a little bit more. So I don't know if it's going to look exactly the way that he said, but I haven't talked to the guy and I don't know him personally, but I would bet that if you asked him that question point blank, he would tell you the goal of that scenario was to shake out the cobwebs in our mind and have a reset, not to say this is exactly how it's going to happen. And at least for me personally, he did that. I would credit that piece with really changing my focus on how to think about this war from very tactical to, okay, like what does this mean for the next 5 years? What does it look like if Putin is gone or if Moscow isn't a major global player, generally speaking? All right, moving on from there, I thought we might turn now and we might stick with this topic for a little while before turning to Brazil and Turkey. And you actually framed it this way, Rob, and it was really helpful for me. So I thought it'd be a good way to sink our teeth into what's going on. You've got a real dichotomy between what's happening with the U.S. economy and what's happening with the Chinese economy. And you were talking before we got on the podcast about how the price of oil is actually an interesting litmus test or indicator for what's going on in sort of the differing paths of those economies. So maybe lay that out and we can kind of dive in a little bit to both of those and break it apart.
Well, the best way to do that is to look at the numbers, I think. So the US consumes about 19 million barrels of oil per day, and China consumes about 14 million. So according to the latest data, Chinese consumption of oil is down something like 20% because of the COVID lockdowns, which brings you back to about 11 million barrels of oil per day. The flip side of that is in the US, oil demand is way higher than normal because of the travel boom, because of the general services and economic sort of strength that we're seeing. So Valero came out this week and said that currently demand for diesel fuel, for example, is up 32% from where it was pre-COVID because of trucking and everything going on. So if you really run the numbers, it's kind of a dead heat. China represents about 3 million of demand destruction, the US about 3 million of extra demand, all relative to pre-COVID. So it's an interesting way to think about the global economy in a nutshell, because you have these two just completely diverging factors. And the oil price is a bit of a barometer to show which way it's going to go, which is why we've been watching oil prices very carefully, because they've sort of been moving sideways for the last 2 months. And we had a tactical short position in oil, which we had on since late May, which we've spoken about, and took it off this week because of that uncertainty. And we just couldn't get any conviction. But it really shows how divergent the different, economic poles of the world have truly become now. And China appears to be getting worse.
Yeah, I think we should emphasize this because this is another one of those things that I think has become normalized and is not normal. The two biggest economies in the world have doubled down on a trade war with each other, also in the context of a global pandemic and in a global energy transition, like full stop. That's really it's really big stuff. And to your point, the Chinese and US economies are moving in completely opposite directions. China, we've talked about China's real estate crisis, still not really getting any better at all. You had home prices and home sales go down again this month. I was joking with you before the podcast. Bloomberg had an article from some analyst who said that Chinese property bonds are no longer analyzable. They're definitely analyzable. I think that they just broke the brain of that particular analyst. Not to throw any shade at him, but I mean, I feel for him. Like you don't expect this sort of thing to happen. There's also, I've seen some talk out there about people are saying that, now that there was the Party Congress, maybe China's going to reopen a little bit. The flip side of that is I thought the biggest news of the week out of China was this Ministry of Finance statement where they came out and said, hey, we want to pilot all of these big tax reforms in Shenzhen And to have, I think I can't remember the exact wording, but it was something like, because we want to redistribute wealth and have more equality and things like that. And they didn't really have a lot of details, but I kind of stopped in my tracks right there, because this was the year that China was supposed to roll out a real estate property tax. They had to pull back because of the real estate crisis. It seems like even in the context of all these economic problems that China's having, Xi Jinping's not blinking. He's actually going further and saying, okay, like my first attempt at thinking about taxes went wrong. Why don't I take Shenzhen, which was the first place really that Deng Xiaoping's opening up and reform took off. Why don't I take that experiment and I start playing with some tax things there too, and see about redistributing wealth in a way that works for the Chinese economy. So I take your point. If we did get that reopening in China, the increase in demand would probably take the price of oil much, much higher, but there's still a lot of uncertainty there, and it still feels like the U.S. is booming and the Chinese economy is still on its knees.
Well, speaking of divergences and speaking of the energy transition, I think this is something that hasn't gotten very much press, but which, if you really look at the numbers, is staggering, which is within China, you're seeing the sort of focus of investment shifting away from property and into some of these kind of new energy industries. So, for example, there was a piece I saw it in PV Magazine, which revealed that this year, Chinese solar cell module capacity, so not the actual polysilicon, but the modules made out of it, is set to double from 360 gigawatts to 600 gigawatts. So to put that into context, the total installations in the world this year is 260 gigawatts. So the amount of capacity is going to be almost triple what they're installing this year once this expansion is done. The amount of polysilicon capacity is set to double this year and then double next year again. So it's going to go from 530,000 megatons, I believe is the right, I might be making that up. I don't know if that's even a number, megatons.
It's okay. 77% of all statistics are made up, Rob. It's not a big deal.
530,000 something to 2.5 million something by the end of the following year. So this is staggering growth in some of these areas, which is in some ways really great in terms of energy transition, because you're going to collapse the prices of these inputs. And that's good for solar installations. It's good for pricing. But it's at the same time hard to see how we can absorb that amount of supply and actually get it installed when we're struggling to install what we're currently doing. And then the flip side of that also is, when you look at the size of this, despite how big that expansion is, this industry itself and sort of the more infrastructure-oriented parts of the Chinese economy are really still teeny tiny compared to the property industry. So that's why I think if you look, iron ore futures in Singapore have finally broken down below this key level that we've been talking about almost every week. And Chinese junk bonds have broken down below the key level that we've been watching all summer and into the fall, which I think really shows the balance of where things are going. But even within that decline, you see these massive shifts from one sector to another because it's top-down driven. And this creates a lot of volatility.
Yeah, there's one other thing I'll say to piggyback on that, and then there's something else separate, but I'll leave the separate thing. The kind of related to what you're saying is, if this real estate crisis does continue, and if you do start to see some of these pressures in the Chinese economy, I'm wondering if you're going to get an effect similar to what happened in Turkey. And we'll talk a little bit about Turkey later. But a lot of the average Chinese middle-class citizen invests in real estate to preserve their wealth. It's not abnormal for an average Chinese middle-class citizen to have 2-3 properties and to want to put their money there for different reasons. And I wonder if the stock market has sort of been a black sheep for China. It's almost like playing roulette or going to the casino. It hasn't been well accepted as a place to invest. And I wonder if that may be about to change. I wonder if some Chinese people in that class are going to look to the stock market as a way of preserving their wealth that is maybe a little bit more secure than the real estate sector, to your point. The reason I'm thinking about this is because Tencent announced a joint venture this week with state-owned telecom operator China Unicom. And the venture is supposed to engage in content distribution networks and edge computing. And China Unicom was up a bunch on it. Tencent has been a laggard, and we have a position in Tencent because we thought that Tencent was the Chinese tech company that wasn't going to run afoul of Xi Jinping so much, that they weren't going to get the Jack Ma Alibaba treatment. I mean, there was a whole, you can go back and listen to some of our previous stuff or read our previous research on this if you're interested in this, listeners. But I bring that up to say I've been frustrated that Tencent hasn't done better in terms of equity price, because the thesis was right. They're announcing state ventures, like like ventures with state-owned companies. Joint ventures was the word I was looking for there. All that's working, but I think in the West, sentiment has turned so much against China that Western investors and even institutional investors are just not interested anymore, and they're all getting out of China. And concerns about, do the ADRs actually mean we own these shares and things like that. And I wonder if there is a play here, because if Chinese people move away from real estate, and if we are moving away from real estate as the thing that you invest in China, whether you're a state government or an individual or a company and everything in between, I wonder if smaller companies in the Chinese stock universe will see some outsized performance with their stock prices because Chinese people are buying them. And you might see that kind of levitation is the wrong word, but you might see some strength there that is not built on the West thinking anything about China, but looking at those places where Chinese people might want to put their money. I don't know. I'm playing with that. What do you think of that idea? Is it a little too rosy?
The difficulty about the Chinese market is it's like the US market before the reforms of the early 1930s, in that the information is no good. There's no fundamental investing because the companies are lying and they don't disclose, or they disclose the wrong numbers, or they cook the books, or it's insider trading, or, it's like the 1920s where everything was about tips and insider information. The equity markets don't function in the same way as they do in the United States or in Europe or even in Japan. So it's hard for individuals to get much comfort fundamentally in equities as a source of wealth storage in the same way that they can with property. Because property, you can see it, you can kick it, you can go live in it if you want. People are much more comfortable with that idea. So I don't think it's likely to happen on its own, because none of those things are changing, at least in the near term. The one thing that could change that is, because it's not fundamentally driven and the information is no good, the Chinese stock market essentially works on, direction from above. And the way to analyze it is, okay, well, what is the government saying? What is the guidance that they're giving? And the Japanese market worked in essentially the same way during their bubble period in the 1980s. The Nikkei bubble happened because the Ministry of Finance said, hey, we want equities to go up, and all the banks make them go up, and everyone, it's okay to jump in the pool because they're going to go up, much like China has done with the property market. So that's always a tool that they have in their toolkit, but it's not as straightforward as one might think, because if you go back to 2015, the last time that they had sort of one of these bubble periods that quickly really collapsed and made them look bad, they kind of tried to do that. And the problem was that things got so bubbly so fast that they then had to slam on the brakes because, equities went up 15% in like 2 weeks. And when they tried to calm things down, then the bottom fell out. And then they had to try to come in and, encourage state-controlled banks to support the market. And it really put egg on their face. So they may turn to that again, especially if they're feeling desperate. But it's not a perfect tool. And I think you have to watch to see the guidance that they're trying to give at a high level. Because if they were really determined, I think they could clearly make that happen. Whether they want to is the real question.
Speaking of cooking the books, before we leave this topic, something to kind of buttress your argument is that, for months now, the Chinese government has been saying there's terrible drought in some of the main growing regions in China, really, really high temperatures, no rain at all, some of the worst conditions they've had in decades, And then it was this week, the Global Times came out and said, actually, we've had a great harvest, like 90%. We've hit all the targets. Everything is going great. And I read that and I kind of stopped too, because this is the danger of thinking too much about history. But in the late 1950s, when Mao was really trying to push China into what he thought should be its next economic stage of development, he set these quotas for how much these cooperatives were going to do in terms of increasing grains. And all the figureheads and bureaucrats in the system gave him the data that he wanted to see and didn't actually tell him what was actually going on in the ground. And the result was a great famine that led to millions of people dying. So one of my, I think let me start that sentence over. The optimistic read for China, for me, has always been that the Chinese Communist Party under Xi Jinping is becoming more powerful, not less powerful, and that it doesn't have those kinds of blinders on, that Xi doesn't have so much insecurity in his position that he wants to read in the reports that he's asking for exactly what he projected and not what's actually going on the ground. I haven't been in the Chinese fields. I don't know what's going on. I guess it's possible that they were able to salvage some of their crops and things like that. But compared to all the messaging we've had since August from China, and then to see that Global Times article say, hey, it was great. The harvest was good. We're doing well. Like, we're feeling really good about where things are going. My eye kind of twitched when I read that too. Anything else you want to say about China or the U.S. before we maybe move on to Brazil?
Well, we didn't talk about semiconductors at all, and I don't know if you want to get into that. It has been a major development. That was a few weeks ago now, but we haven't spoken since then.
Yeah, that's a good point. It's a huge deal, and that's when I said a couple minutes ago, doubling down on a trade war in the midst of a global pandemic, all these other things. That's what I mean by doubling down. And that, I really think we have the Taiwan Strait crisis to credit for that. I mean, if you go back to June and July, look at the leaks coming out of the White House, look at the Washington Post, Bloomberg, are getting all these stories about how, the Biden administration's thinking about walking back some of the Trump tariffs. And that made a lot of sense. If you are the U.S. government, you want to knock down inflation. I've said this a couple times now, I think even on this podcast. The best thing you could do is not raise interest rates. It's reach some kind of even temporary deal with the Chinese to help the supply side. Because if you can help the supply side, you'll drive inflation down in a hurry. Then we get the Taiwan Strait crisis issue, which is really has nothing to do with geopolitics and has everything to do with what Nancy Pelosi decided she wanted to do. So, geopolitics couldn't have predicted for you that was the moment that you were going to have a Taiwan Strait crisis. And boom, suddenly the hawks in the Biden administration won out. And so now you get these major semiconductor restrictions announced, which far from helping inflation could make it even worse. That there is not a more intricate, complex, sophisticated, globalized supply chain in the world today than the global semiconductor supply chain. Semiconductors really, the whole industry starts with the US funding it as a way to create more accurate missiles in the 1950s and 1960s. But when the Soviet Union collapses, the semiconductor industry becomes really the poster child for globalization. So Taiwan has the fabs, and the Netherlands has the equipment maker, and Japan has the photoresist, and South Korea does memory, and we do software and design. Like, every single country has a very rarefied expertise in one component of it. And the United States is basically saying, okay, that's done. The same thing we did to Huawei with 5G in China, we're going to do that with semiconductors right now. And Huawei 5G, I mean, it had some impact on the global economy, especially telecom companies and things like that, but it wasn't really yet a global thing. You weren't going to feel it globally. Semiconductors is a whole different story. I mean, China can't do any of the advanced semiconductors, but they have actually become the place where a lot of assembly for the lower end semiconductors comes from. And the chips that are in that fancy dishwasher that you bought that's going to clean your dishes the exact amount, that's probably a chip that was made in China. Some of these chips that are in cars, those are things that are inextricably linked to China being part of the semiconductor supply chain. You've also got the United States now leaning on its allies. This was coming out this week. I think Japan is now considering this, telling Japan, South Korea, hey, you have to go along with this. Like, we're really serious. And so now you're putting countries like Japan and South Korea in a very difficult position, because they've bet a lot on, we have these relationships in China, we have factories in China, all of this chain is all connected. So if the goal was to I think the goal started as, let's try and fix the supply side, and we've come kind of complete reversal in the last couple months to where now the United States is going after the thing that China arguably needs more than anything else to reach some of those goals that Xi Jinping has set out for the Chinese economy in the next couple of years. But we're also, I mean, we're kind of shooting off our own leg here too, because the United States has a lot of advantages with the semiconductor supply chain. We can't just snap our fingers and do it by ourselves overnight. So there's a little bit of clumsiness with the policy there at the top. I'm going to have a couple guests on in the next couple of weeks due to listener requests to talk more specifically about the semiconductor issue. But yeah, when I say doubling down on the trade war, I don't mean the past. I mean that the United States right now, just in the last month, has done more to inflame the trade war with China than anything the Trump administration did. We're in a whole new universe now with this trade war.
And yet it seems like one of those issues that the political rhetoric is likely to sort of sputter out when it comes to actual action, because it's, as you point out, it's physically impossible to detach many of these supply chains from China. So what are you going to do? Are you going to do the nuclear option where you literally cannot get these chips? I mean, the industry is already reeling from a lack of chips. Like if you look at what the semiconductor companies are reporting this past quarter, it's all over the place because of these issues already. It's already a mess. Consumer chip demand is collapsing. And yet at the same time, auto chip demand is rising because there were such shortages for such a long time. They're only now fulfilling the backlog that had built up during 2020 and 2021. So if you look, U.S. auto sales, the SAAR was over 14 million this quarter, even as the economy is sort of slowing down, and especially in terms of durable goods. Used car prices are declining. So even a small disruption like that is causing havoc. Never mind what they're contemplating here. And I think we both saw in the Financial Times, there's an interview with the head of a Japanese semiconductor company, and he basically said, like, look, it's just physically impossible to do this. Like, we're not going to cut off our arm in China because we'll be completely debilitated. And I think it's an interesting test case. So if you remember, we wrote this white paper about geopolitics and investing. And one of the things that we said was there's a lot of comparisons to previous eras of deglobalization, which we're obviously seeing. But at the same time, a lot of the aspects of globalization are so entrenched that you're unlikely to see the most extreme manifestations of that because you just can't get the capital out. You can't undo what's been so deeply done. And I wonder if we're starting to see that, where the U.S., can say things and shake its stick all at once and berate the Japanese and the Koreans. But at the end of the day, are you going to really suffer the consequences of what that means to not produce chips that are required for, Whirlpool dryers and washers and, refrigerators and the sorts of things that Americans use and need every day? I find that hard to believe.
Well, but you have to break that apart a little bit. So, and I often say the left hand doesn't know what the right hand is doing in the United States, and that's somewhat good. That's a symptom of being a democracy, of an actual representative democracy. If everybody was doing the exact same thing, we would have a dictator. But the Federal Reserve is doing one thing, policymakers are doing another thing, industry wants another thing, and then there's how the people feel in general. Right now, the Fed and the U.S. government and U.S. industry are on completely opposite pages. The Fed wants to hike interest rates because it's worried about inflation. The United States was toying around with trying to fix that, but we want a trade war with China. We want to cut out this Chinese competitor. We want to hit Russia while it's down. It's really thinking national security, which makes sense. Biden's staring I don't know, the midterm elections look a little bit rosier than they did for the Democrats a couple months ago. But you could sort of see Biden doing that thing where U.S. presidents pivot to foreign policy in the latter half of their term because they don't think they're going to get much else out of Congress. And then industry doesn't want any of this. Read any investment report from a major US company, they're all still betting on the Chinese market. I mean, I'll call out Starbucks as the one just because they were still thinking that they were going to build more Starbucks and sell more coffee in China. Like companies that are still doing that are really behind the eight ball. But the point there is that you just have all these different things happening. And then there's also the population in the United States itself, where we are so divided and so polarized here. But one of the only things Americans agree on is that China is a boogeyman. And we are sending politicians to Washington who are elected on those types of platforms. So you could absolutely see, and we've already seen this with Nancy Pelosi. You see a congresswoman there doing something that didn't work with federal government policy, didn't work with kind of larger things. So, I mean, the example that comes to my mind is the Smoot-Hawley tariffs. That wasn't good. It wasn't like the federal government wanted that thing, but the people elected people who sort of push those things through. You can kind of see those things where it's self-defeating. The flip side of that is in a place like China, like, she tells industry and people and the People's Bank of China what to think, and they do it. So I think you could see that kind of short-sightedness. You've already seen the U.S. walk back the semiconductor stuff a little bit. They issued these one-year reprieves to a bunch of different companies so that they could keep things going. But that's going to be a very difficult balancing act. The last thing there is just, this is why, one of our theses here is multipolarity is not just a geopolitical term. It means something in energy markets. It means something with technology too. So in the semiconductor industry, if you're thinking sort of 2-5 years long term, any country that has ambitions to be a significant regional power, let alone a global power, is going to need to be able to do this self in their own country by themselves. So that's why the U.S. is moving towards, hey, we're gonna have all these benefits for companies that move their fabs and production to the United States. It's why South Korea, Japan had their own little trade spat in 2019. It's why you probably don't want to isolate yourself from the Chinese market either. So because as much as the data is rotten in China, I guarantee you SMIC is going to be a big company here for the next decade. That's the main Chinese semiconductor manufacturer, and they're going to soak up a lot of this interest as China slowly tries to build up its own self-sufficient semiconductor base. So it can't happen right away, and I think you see that in here are the restrictions, here are the one-year reprieves. But even so, the United States has injected so much uncertainty and has really caused, a race. I think it's now a race to leave China sort of thing, where I think we are going to have those disruptions. And I'm with you that industry doesn't like that. And I'm with you that there are constraints to the U.S. government kind of going 100% there. But the U.S. government's also doing it. They're not listening to those concerns. They are prioritizing the geopolitical needs first, which, hey, that's why we're here. That's why we talk about this stuff, because this stuff is going to become way more important as the years go on. This is just the beginning.
Well, it supports this notion that we talk about every week, which is volatility begets volatility. So volatility in policymaking creates a logjam in the system that creates a strong price signal, that creates a response, and that creates a new policy or legislation to fix the original thing, which sets things in order again. And we're seeing it in monetary policy, we're seeing it in fiscal policy, we're seeing it in trade policy. And I don't think that's going to end anytime soon.
No, it's also why, and we'll probably talk about this next week, because the German Chancellor Olaf Scholz is going to China tomorrow. He's taken a lot of flack, even in his own government, for saying we don't want to decouple from China, and his government is not exactly all of one mind about that. Apparently, part of their coalition agreement was that Germany was going to treat China a little bit differently. But you have Germany there signaling they get it; they can't just turn their back on China because the United States says so. So even as all this stuff is happening, like I take that Scholz visit, that's like the epitome of German pragmatism right there. Scholz is going to get a lot of crap for that, and he might not be able to push it through because of his limited power within his own government and the different constituents that he has to satisfy. But that's a great example of a country that wants to compete with China, that is a U.S. ally, that is in NATO, all these other things, and yet when rubber meets the road, there they are shaking hands, or they're going to be shaking hands in Beijing and trying to figure it out. So,
well, speaking of not decoupling between Europe and China and who sits in between, shall we move and talk a little bit about Turkey?
Yeah, let's do Turkey and then close on Brazil. You want to tee up the Turkey conversation?
Well, why don't we start with the politics of it? Because this was something that we were discussing this week of Erdogan's chances. And according to a friend of the firm, he has approximately zero chance of getting reelected, which I think the super forecasters might quibble with that approach. But what do you think of that, and how much do you think it matters, and what are the ramifications if he does not win?
Well, so let's set the stage a little bit. So Turkey is headed towards elections June, July of this coming year. Turkey has been cutting interest rates, really sort of the opposite of what the rest of the global economy is doing. And as a result, the Turkish lira has been declining rapidly. And despite that, I mean, Turkey's headline inflation was over 80%, and that's just the official data. It's probably higher than that in general in Turkey. Despite that, Erdogan seems to be doing okay. The Turkish economy hasn't collapsed. It's actually doing pretty well. There's sort of a lot of things to like about what's going on in Turkey in general, but you are seeing, I wouldn't say 0%, but if you look at the polls this week in Turkey, if elections were held tomorrow, not at all a foregone conclusion that Erdogan would win, and that's in a system where he's already made a lot of rules to ensconce, his position and to really neuter opposition to his rule, and the polls don't look very good. If you had the CHP come back, if the Turkish opposition could finally get over their internal differences and offer some kind of alternative to Erdogan, I would think it's boom times in Turkey because they are more secular, they are more business oriented, they're less concerned about paying out political favors to Erdogan's cronies and things like that. I mean, you could see really good things there. And I mean, Erdogan knows the danger that he's in more than anybody else. The last time inflation was this high in Turkey was 1998. Erdogan rode that sort of high inflation directly into power. He owes his position in power because he capitalized on a regime of high inflation and said, hey, I'm the guy who's going to figure it out, and I'm the one that's going to return kind of Turkey to its normal status. So he's been able to deal with much higher inflation than I think you or I thought. But the flip side of that is it's definitely costing him electorally. And then this is the weird part of all of this. Turkey slashed interest rates again last month. But the central bank said, we're going to slash one more time, but then the easing cycle is over. Then we're going to start to pivot. And that was weird. So previous Turkish central bank leaders have said that before, and then Erdogan wants to keep cutting. And when they don't, he has found a new central bank governor. But it's a little bit weird that they're saying, all right, we're going to do one more month of slashing rates, and then we're going to pivot about 6 months before the election itself. So if the charitable interpretation is, inflation is going to start to come down, it's peaked with this 85% reading now, they're just doing exactly what they need to be doing. But you would think that if Erdogan's going into the election, he'd want to keep cutting rates so that he can hand out all those favors and get things going. That's been the playbook the entire time. The other part of this is maybe Erdogan sees that he's losing some of the center, or he's losing some of those business-oriented Turkish entrepreneurial folks, and he needs to show, hey, I wasn't just off my rocker. I had this thesis, nothing has collapsed, we're doing okay, we're de-dollarizing, we're reducing our dependence, we have all these good things going for us. Now I'm going to get back to more normal monetary policy, and international investors are fickle. As soon as he gives them 2 or 3 months of normal monetary policy, they'll probably forget about everything that's happened over the past 2-3 years. This has happened in Turkey many times. So that's kind of the lay of the land. And maybe you can talk about what we've been doing with our position in Turkey. Why, again, a lot of uncertainty here heading into those elections and what's going on in Erdogan's brain.
Well, I guess there's a lot of issues to dive into there. I think you're right that it's good to point out that he came into power following a period of inflation like this. And actually, for much of the last 75 years, that's how the Turkish political system has worked. So in 1949, inflation has always been high in Turkey, significantly high relative to what we're used to. But in 1949, you saw a big acceleration and there was a coup. In 1960, you saw inflation really start to pick up and there was a coup. In the late 1970s, inflation accelerated, regime change. I want to say Özil came in, but that's the German Turkish soccer player. Özil came in, and there was a political tide change. So I think that has to be your baseline assumption, is that he's going to lose just based on sort of those base rates of what tends to happen when inflation does what it's been doing. So I don't know the politics behind the monetary policy change in tone, and if that's related to that, or he's trying to dial it back a little bit to appease the center. It's hard to say. The way that we've been handling this tactically is, so we've had a moderate-sized long position in the Turkish ETF, which is denominated in dollars, and has done spectacularly well in the last few months, primarily because they've pinned the currency rate against the dollar in the high 18 range, even while inflation has been ripping. So all of these Turkish investors, these local savers, have been buying up Turkish stocks. And if you look at the Istanbul index denominated in lira, it's been an exponential rocket ship because that's where people are hiding their money. So it's been a great trade in dollar terms because you're getting the benefit of these artificially pegged rates, and then the inflation is showing up in the underlying index. The risk here, and the reason why we're closing this position this week, is because essentially the Turkish stock index right now is a gauge of inflation expectations. And if you really think that energy prices are starting to roll over, that food prices are off their highs, that the Turkish economy is starting to slow, which it is, in sympathy with Europe. So the industrial survey index came out last week and showed that they're really moving into contractionary territory now, in sympathy with Germany and some of their key export markets. Then those inflation expectations are likely to come down. And especially if they're signaling, like you just pointed out, that they're going to lay off on the interest rate cuts. So you could see a significant pullback in that exponential move up, which I think makes it less attractive from a risk reward standpoint to be owning Turkish equities denominated in dollars right now. But, and this is throwing the ball back into your court, if you get a positive election outcome, or I shouldn't say necessarily positive, but if the opposition wins, what do you see being the potential setup for this next year?
Well, this is so. I mean, it's really we're talking about an issue of degree. We already talked about Eastern Europe and Poland doing well because of Russian weakness. I did not mention Turkey. So even if Turkey has shitty monetary policy going forward, Turkey's going to do well. They've got energy from the Black Sea coming online. They are manufacturing a lot of stuff. They're soaking up manufacturing demand from Europe. When we talk about deindustrialization in Europe, Turkey is one of the big winners there, and they're making lots of things. I was surprised to see that my freezer that I bought recently for my house made in Turkey. I didn't know that that was a thing that was happening. So there you go, like a little anecdote there. But so even if you get bad policy in Turkey, things are going well from it from a macro perspective. I haven't even mentioned Iran. I mean, Iran is on fire. It is doubling down and becoming a global pariah. That's the only real competitor there. I will say this election of Netanyahu matters in this little context because Netanyahu going away allowed Turkish-Israel relations to get a little bit better. Erdogan and Bibi don't like each other. So if you take away that relationship, it's not going to be a huge deal, but there's some interesting synergies between the Israeli tech sector and Turkish manufacturing and agriculture that go away maybe if Bibi and Erdogan both stay in power. But to your point, even if Erdogan's reelected, I like Turkey. From a macro perspective, it is well situated to capitalize on a lot of things that are happening. If the CHP wins, if the opposition comes in, if you get more level-headed, predictable monetary policy out of Turkey, then we're talking about an extremely attractive opportunity because I think that you will see a lot more interest in Turkey because the only thing I think that scares people away from Turkey right now is they don't understand the politics. They don't, and rightfully so. You shouldn't trust Erdogan. He's doing things for the benefit of Turkey, not for the benefit of foreign investors. If you had the return of the sort of more business-oriented class and they could really start to chip away at that and enact some more policies that are more friendly to international investment and restoring some of that faith in Turkey's law and order and political stability, take away some of the reputational risk of being there. I don't know. I think that foreign investment would really get interested in Turkey very, very quickly. So I like it either way once you kind of clear the uncertainty that we're in right now and you clear the uncertainty around the election. But certainly if you got, and by the way, it can also, that more business-friendly government can also be in the form of Erdogan. he has been many different people as he's been a leader of Turkey over time. And it's difficult to teach an old dog new tricks. Like he might be getting to the age where he's not able to morph again into another version of himself. But one of the reasons he's stuck around as long as he has is because he has always had his finger on the pulse, and he has been able to see where the prevailing political winds are going. So if he gets another election and ensconces himself in power, he might be that pro-business, pro-international investment, president that comes into power. It doesn't necessarily have to be the CHP. It just has to be a version of Erdogan that wants foreign investment, but is more cautious about it being denominated in U.S. dollar debt and cares more about the lira and everything else. So I like Turkey, even if the politics continue to suck. But if the politics get better, whether under Erdogan or the CHP or anything else, you're looking at a country that has a lot of potential, and which has gotten a lot of negative sentiment from people who just look at the inflation rate or just listen to Erdogan's crazy statements that make it to English press and form rigid opinions about it without understanding what's going on.
And that's not speculation either. I think it's important to remember that it was under Erdogan that Turkey experienced its, most quote unquote orthodox period in the early 2000s when they were trying to qualify for EU ascension. He's already shown that side of his pragmatic character, and when that was in the best interests of his party and him politically and Turkey, he was very willing to do that. So it's certainly not out of the question that you could see a move back in that direction. And it's an interesting contrast too, I think, when you think, we were talking about Xi Jinping earlier and sort of the situation that he faces and seizing more control, centralizing, doubling down on the authoritarian instincts. You have to imagine that coming out of a positive election victory, Erdogan would feel like he has a little slack that he could work with. He'll have secured his political situation. The inflation situation, certainly just comping against this year, is almost certainly going to be significantly better than it is right now, unless Turkey spirals into a true hyperinflation, which it's never done before, and seems a pretty unlikely scenario at this point. So he should be feeling pretty good. So I think that's a very plausible scenario that you get a toning down of the things that are scaring away all the people on Wall Street and in the city of London.
Yeah, I'd say one more thing about this before we turn away from it, which is I would bet that China is envious of Turkey because Turkey is doing exactly what I think China would want to do, because Turkey is small enough and not threatening enough to a lot of the West and has been in NATO for so long that it gets to play all sides. Erdogan's talking to Putin on a regular basis. He's negotiating the grain deal. He's going back and forth. He has relations with Moscow. He has relations with Beijing. And yet Turkey's also in NATO, also still, talks about EU. I don't think they're going to join the EU, but they still talk about it as if it's a thing that they're interested in. They're still a U.S. ally in the context of NATO and things like that. Erdogan has had some controversial monetary policy. He's done a lot of things controversially politically, but geopolitically, he's been very wise. He's been able to keep Turkey extremely pragmatic and open to almost all different angles. Turkey is that rare country that really, you can't pigeonhole it on one side or the other. Now, that's a difficult balance, especially as multipolarity becomes more pronounced and the pressures to choose a side or to build your own sphere of influence are going to become more stark. But right now, Turkey plays all the sides. Like they can go to China, then they can go to India, and then they can go to they're a unique case in that point. And that's another reason I think from a macro perspective to like their position. And it's a reason that powers based in Istanbul, whether they were Muslim or Christian or Roman or Turkish or whatever they were, during times of multipolarity and when sort of trade routes are changing and things like that, there's a reason that Istanbul becomes a center of wealth, a center of power, and a state emerges there that can protect that and leverage that position kind of globally. We're in that kind of environment. But I think that's a good segue into the last thing we'll talk about, because a country with it's not a similar position, but the end result is the same, which is Brazil. Also has a lot of those types of advantages going for it. Bolsonaro lost the election. It was very, very close. I think closer than most polls suggested. but he lost. He pouted about it for a little while, but then came out and said, okay, like first of all, he authorized the transition of power. And then yesterday, I don't know if you saw the video, he did a video to some of his supporters saying, hey, stop with the protests, stop blocking the highways. Like, the Brazilian economy needs to roll. I'm disappointed, but like, we got to get back to Brazil kind of functioning. And even some of his strongest supporters came out and said, we will fight Lula. We will be the strongest opposition there is to Lula that he's ever experienced. Like, we're going to really fight him hard. But that, for me, that's all very, very bullish. That's a very polarized country that is going to have a democratic, peaceful transition of power. And that's not something we can even say here, sitting here in the United States. Well, me sitting in the United States, you're sitting there in France. So
things are less peaceful here on a regular basis than over there, frankly.
Well, it's a French national pastime to go protest and throw things in the street in Paris on Sunday.
Throwing of bricks. Yeah, I mean, I think it's a very positive outcome, because when you have dysfunctional societies, it's usually when groups like, the Bolsonaro's party feel like they cannot accomplish what they want to accomplish through legitimate means. And clearly that's not the case here. And almost the fact that it was so close is a positive, because they were very close to being reelected. And they see that as an avenue to go through the electoral process and not try to burn the country down, because they feel like they're going to be stymied no matter what they do. So yeah, that was probably the best case outcome from that scenario that one could have hoped for.
Well, and it's remarkable that Bolsonaro was that close to winning too, because I mean, Lula is not a shining beacon of virtue and normalcy either. But I mean, Bolsonaro, he's a crazy dude, like objectively kind of crazy. Like the thing I love throwing out there is that he said very seriously that the COVID-19 vaccine will turn you into a crocodile if you take it. No, it's like, I mean, that's something he actually said. But the fact that somebody that crazy could get that close to beating an established candidate like Lula with all the name recognition there and all the crazy things that have happened in Brazilian politics, I think it tells you that he was able to fuse together his sort of conservative, well, conservative is the wrong word, kind of the poorer classes that were open to that populist message that he brought. And then also he was very pro-business. He didn't like the sort of tendency towards socialism that Lula represents. He wanted to privatize things. He did some work on that, maybe not as much as he promised, but it was this interesting combination of populism and sort of economic liberalism that he fused together. I think he lost some of that support, I think, in the economic entrepreneurial community, because he didn't go as far as he said he was going to, and he always shot himself in the foot because of his controversy or the crazy things he would say, or he couldn't help himself. You know, he wants to privatize things, but then he yells at Petrobras for, not having oil prices low enough. But I think that what you're probably going to see here is, I mean, Lula has a very, very weak mandate. He's not going to be able to do what he did 2003 to 2010. He's not going to be able to push through, I think, very left-leaning policies. He is going to face a really stark opposition. And we've talked about this before on the podcast. There's a lot of strange similarities between Brazilian and U.S. politics. I mean, Lula to me feels like a Biden-esque figure. The dude's 77 years old. He's got a lot of political experience, but he doesn't have a clear mandate. He came in not campaigning for anything, but campaigning against something. So if the Bolsonaro camp can move beyond Bolsonaro and find like a leader who can express those two things without all the craziness of Bolsonaro, that seems to me to be the direction that Brazil is moving in here. So Bolsonaro was beyond the pale just a little bit too much for Brazil. But I wonder if you could see that polarization resolve itself if some of the things that Bolsonaro was standing for were represented by somebody who wasn't so rough around the edges, or who wasn't so crazy in some of his own kind of idiosyncratic personal views.
Well, I think that's the right way to think about it. When you're analyzing Brazil, the most useful way to think is as a bizarro United States in many ways, not just politically, but culturally, having the sort of legacy of moving to the frontier of adventurism, entrepreneurialism, people coming from all over the world to go there to make their fortune, of course, expressed in different ways. But there's many, many parallels and similarities. And the Bolsonaro one is probably the most obvious because, I mean, the obvious comparison is to Donald Trump. And I think both of them play a very similar role in their respective societies, which is sort of galvanizing distrust of elites, a feeling of being left out of a racket where people are getting rich through ways that are illegitimate. And in Brazil, I mean, you can't underestimate the power of the Lava Jato corruption scandals. This was literally the biggest corruption scandal in the history of Brazil, and that's saying a lot. Um, and that sort of embodies all of this distrust of, hey, these guys in Sao Paulo and Rio riding around in their helicopters, and they're making these backroom deals, and we're left out, or and it gets tied in with all of these cultural things about traditionalist values and stuff like that. But you have to think of those as essentially similar problems when you're analyzing each of them and what's likely to play out. Um, but getting to the nitty gritty, I think the setup in Brazil could hardly be better right now. And here's why. As you point out, Lula does not have a strong mandate. It's unlikely that you're going to see really radical legislation come out of here. He hasn't even expressed clear plans of what he wants to do. It seems like he didn't really know, and he didn't want to say anything too crazy because he was essentially the "I'm not Bolsonaro" candidate, um, in spite of his own past. Um, so that's probably good, and it tends toward central solutions. The second thing to note, which many people don't pay attention to, is that in the last few years, there's been significant legal changes in Brazil where the percentage of the budget that the executive branch actually has responsibility for has been significantly reduced from like 15% to less than 10%. So the actual levers at his disposal are much less than they were even a few years ago. And Bolsonaro was actually trying to change this so that he, would have more leeway himself, but it has not been changed. And the amount that they do have access to is in many ways controlled by certain formulas tied to inflation and the budget deficit. So the space for maneuver is not very big. So it comes back to not the presidential election, but the legislative elections that took place over the summer, which we spoke about previously, which essentially resulted in a sort of center-right leaning majority. And we talked about a few weeks ago the question that was asked of Brazilian business people, business owners in Folha de São Paulo, the survey they'd done. What do you most want the next regime to focus on? And the answers were the most banal, central, pragmatic stuff. Um, Tax reform, labor market reform, bureaucratic, red tape cutting, things like that. I think that's the most likely political outcome, is for a fairly moderate, fairly central consensus to form as these two very polarized sides kind of meet in a stalemate. And the background to all this, remember, is that Brazil is booming. So, we talk about the three legs of the stool here when you're analyzing investments. You talk about fundamentals, like what's actually happening. You talk about market action. What is Mr. Market showing you? And then you talk about sentiment. Well, the fundamentals are really strong. The FDI numbers just came out last week. FDI meaning foreign direct investment. So this is actual physical investment by foreign companies into Brazil, building factories, that sort of thing. And FDI has been accelerating for the past few months already. So that's a very positive signal. We mentioned that the economic activity index has boomed and rebounded back to levels that we haven't seen for almost a decade. And interest rates are coming down, not just the headline rate, where now we've essentially reached peak hawkishness. They've controlled inflation. Inflation is starting to roll over, but also all along the yield curve. And if you look at rates for credit cards, for business loans, they're all compressing. and the cost of capital in Brazil is coming down. And I think that's contributing to this boom that we're starting to see. So all of this is really positive fundamentally. On the sentiment side, I've read all of these editorials after the election, and they're all shitting all over Brazil. I mean, I think there was, I forget where, maybe in The Economist or something, and, oh, Lula's won now, and now he has to fix things because it's a huge mess. And since 2011, they've done X, Y, and Z. Well, yeah, that was 12 years ago. You're clearly not looking at the more recent data. So you can see this narrative has just gotten so stuck where, oh, Brazil, they're doing terrible. No one wants to admit that things were not that bad under Bolsonaro in the last 2 years, actually. And I don't think he directly contributed to this, but there's sort of this reluctance to acknowledge that the economy has rebounded so strongly while he was happening to be sitting in the presidential palace. So that's a great setup, to my mind. Positive and accelerating fundamentals, sentiment that's in the tank, and Mr. Market showing, I don't know, it depends on how you slice out the Brazilian market, but on a relative basis, they're performing really quite well, and the currency is starting to rebound. So all of these things are good.
Yeah, and I would just add that at the geopolitical level, there's a lot to like about Brazil, and I'll make a similar case about Brazil that I made about Turkey. Even if they never figure out the political issues, they're still gonna do well. You would have to have Argentina level incompetence for Brazil not to capitalize on the thing that's going on in this geopolitical environment. The one caveat I would say to that is, I say that because that's true in a multipolar world. If I'm wrong about multipolar world, if say the world goes bipolar and it really is a US-China Cold War type situation and you're either in the US camp or the Chinese camp, that would be a worst case scenario to my mind for Brazil, because those are the types of moments. If you look in the Cold War, there's a reason Brazil didn't do that well, I think, in the Cold War, because it was you're either the US or the Soviet Union. There wasn't that room for powers like Brazil to rise and have their own regional sphere of influence and scale their economy and do these sorts of things. You had to be pigeonholed. If we get to that sort of you're having to pick sides between the US and China, then maybe the Brazil's geopolitics don't look so good. But I think we're going multipolar, and in a multipolar world, Brazil is clearly positioned to do well. They don't have any enemies on their borders they need to worry about. They get the sort of defensive security protection that the United States gets with oceans all around it. They don't have any meaningful economic competitors on the continent. Argentina is the only one that could play ball, and they are an absolute dumpster fire. They have their own economy of scale. They have all these other things. So if you got good governance out of Brazil, okay, now we're talking about like a generational opportunity. Even if you get bad governance, even if it ping-pongs back and forth between figures like Lula and Bolsonaro and they never figure it out, we're still talking about a country that demographically looks good, that geographically looks good, that has all of these commodities that the rest of the world wants, that is going to soak up labor market interest as supply chains change. I mean, all that stuff is happening irrespective of the things that are happening at the political level. So oftentimes I hate the argument that, oh, the individual doesn't matter. It's all about the long-term geopolitical fundamentals. I think individuals obviously do matter in geopolitics. That's one of the things that separates me from most geopolitical analysts. But in this case, I would tell you we spend way too much time talking about Lula and Bolsonaro and way too little time talking about, to your point, a lot of the good things that are happening in Brazil at the fundamental level, and how even moderately better governance, or even take away the uncertainty of what crazy thing Bolsonaro is going to say today, should help a country that is already primed to do well.
Well, just to put some tangible anecdotes around some of those positive fundamentals, here's a few things that we've noticed and put on the knowledge platform internally in the last few weeks around Brazil and multipolarity. So China has recently approved the import of GMO Brazilian corn, which is a huge deal. We've seen a lot of anecdotes and data points of the Brazilian agricultural industry beginning to move into wheat, actually. And I believe that there was also some information about them increasing their rice growing capacity, if I'm remembering this right.
Yep.
Yeah. So you have the agricultural sector going from strength to strength. The nice thing about agriculture, too, is it's, I think, a much harder proposition for the United States to really raise a ruckus. Semiconductors are a very specific item that's being sold to a very specific customer in a very specific place. Agricultural commodities are a commodity, and it's much harder to turn the taps off than for industrial goods or high technology and that sort of thing. So that's one data point that's interesting. The second one is, so from the bottom up work that we do, we're seeing more and more and more evidence of cross-border hiring in services and in technology. So American tech companies are increasingly hiring abroad. There was an interesting anecdote about people in India who actually work for these big tech outsourcing companies like Wipro or Infosys and places like that. And they're moonlighting, they're taking second jobs with European and American startups just because now you can hire people from wherever. This is huge for Brazil. Brazil has an enormous population, and the sort of high educated, sort of service and tech oriented sector in Sao Paulo and Rio and sort of the southern part of the country especially is really well suited to do this kind of work. And I think you're seeing increasing demand to hire this sort of person because the barriers in that part of the world are going down. And you're actually starting to see startups emerge that are focused on payroll issues and legal issues, essentially trying to make it seamless to hire someone from wherever you want in the world and deal with all the tax and payroll crap that you have to deal with. So the friction is coming down more and more and more. So for a country like Brazil, that's a really positive thing as well. So, you can see a lot of these sort of trade tailwinds starting to move in their favor, even if you just look from a bottom-up standpoint.
Well, Rob, I think after 2 weeks off, I think we've given the listeners plenty to chew on here for the hour and 15 minutes. So unless you've got anything else on your mind, I think we'll say, well, is it bonne nuit yet, or are we still evening time in Paris right now?
Well, usually you say bonne nuit when you're going to sleep. So it's definitely bonsoir territory here. Or even bonjour. There's always the awkward in between, like between 6 and 7, when you roll into the store and you say bonsoir and they say bonjour, and it's a terrible moment.
Yeah. Well, either way, you get to be in Paris, so I won't feel too badly for you. So we'll pick it up here next week. Yeah, that's it. Cheers. Thank you so much for listening to the Cognitive Dissidence podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.